Our stock market and dollar jumped today after the United States hinted that its campaign of interest rate rises is coming to an end. The move could also be good news for mortgage holders here.
For months, Donald Trump has waged a campaign against the Federal Reserve, which sets US interest rates, and its chairman, Jay Powell.
We have interest rates going up at a clip. I think the Fed is out of control.
Then came this today about interest rates from Powell, which caused global stock markets to soar.
They remain just below the range of estimates of that level that would be neutral for the economy.
The Fed is going to pause. Powell is kowtowing to the president. That's what the optics said.
The optics are there for all to see. Trump had told the Washington Post about the Fed. They're making a mistake because I have a gut, and my gut tells me more sometimes than anybody else's brain can ever tell me. That's because US interest rates jumped 7 times in 3 years, compared with Australia's record run of flat rates. That word neutral is important because for months Jay Powell's been telling the markets that US interest rates are well below neutral, suggesting that they would keep on rising into next year, until last night. And that change of language caused shares in the United States and Australia to take off in top gear.
When economies are going okay, neutral rates are what central banks seek. They don't want to put them too high and choke off growth. They don't want them so low that there's an outbreak of inflation.
The Fed chairman also name-checked the Aussies when asked when the US boom will end.
Business cycles don't last forever, unless you're Australia.
And chances are that Australia's 27-year run without a recession will keep going if US rate rises slow down, meaning more jobs and ongoing cheaper mortgage rates.
What goes well in the US or goes well in China generally goes well in Australia.
Ross Greenwood, 9 News.